Hello, everyone. Good afternoon. People are joining yet. So we'll try and start in about 3 to 4 minutes. For those who have already joined, thank you. I'll start while others still join. Thank you, everybody. Welcome to the hBits pre-launch webinar of Tech MNC at IT Hub. My name is Mihir Kanakia. I head the investments and partnerships business at hBits, based out of Mumbai. Well, what we are going to do today is, and first of all, thanks for taking interest on a Saturday afternoon. You never know which time is the best time on the weekend to connect on such things, but investments always are good to be considered at a time when you have peace. So thank you very much for taking time out at this time. And we'll do more such webinars and we'll share these links with everybody post this webinar for those who have missed. I will just quickly cover the flow of our conversation today. I'm going to make it as crisp as possible. I'm just going to quickly, for those of you who don't or know hBits or fraction ownership as a investment option, or generally engaging with hBits for the first time. Again, thank you for joining. I'm just going to cover a little bit about what hBits is all about and what we've done so far. We are going to cover very quickly on who our management is. End of day, you would like to know who runs the show, who manages your money. So we are going to just cover that a bit. And then also, for those who are considering fractions ownership for the first time, although it's almost a 5-year old concept now in India at least, and globally it's almost 50, 60 years old. But for those who are hearing for the first time, I will just cover 2, 3 slides on just the basic concept of how it works, how transparent it is, and what is the general process of you investing with us. And then I will jump to the opportunity that we are here to discuss, which is the tech MNC tenant at an IT hub in Mumbai. I hope that works for everybody, and here we go. Of course, later on we'll take questions. We've kept about, so hopefully we'll finish this off in about 20-25 minutes, and then maybe another 10-15 minutes for any questions. Any questions we don't get time for to address, or we are not able to address immediately, be rest assured, our managers will return to you with the answer. And thanks again for your time. I will start from here. Here's a little bit about hBits. hBits has been one of the very first players starting fraction ownership in India. We have been doing this for now 5 years. We just celebrated 5-year anniversary from our startup. We are one of the first 2 or 3 organizations that started this and brought this to India. Mind you, this is a very, very established and a very well sought after investment option in all the developed markets. We are one of the pioneers trying to lead that in India, and hopefully we've done well, as we would like to showcase here. Our group exposure to assets managed is about 3,000 crores. We have 35 plus years of work experience in commercial real estate, which we specialize in. As some of you might know, fraction ownership happens across a lot of product types and asset classes. But the leading asset class is commercial real estate, and that do grade A commercial real estate, because that's where the highest yields are, to put it very simply. We have a dedicated in-house team which only and only evaluates new properties, does valuations for them, assesses which one are worth fractionalizing and selling, negotiating on behalf of our hundreds of investors, so that the entire investment process is seamless. That is, in fact, the biggest value add that a fraction owner player like us does. You don't have to worry about which property, due diligence, all those things we do in-house. And that's what we do. This is some of our experience of our team members. They are from banking, they are from finance, from top institutes in India and abroad. Our origins are from Recon Group. which is where our co-founder, Mr. Shiv Parekh, hails from. He, after his graduation from Stanford, Harvard, he started Workloft, which is a co-working space. That's about 4 years back, 4 5 years back, and then he also ventured into hBits. Bits, as you can understand, is literally buying properties in bits, and we just wanted to make it very easy for investing in real estate, that too with high returns. So that's a very quick one on our group and our background. As I said, Mr. Shiv Parekh is the founder and CEO. He's studied in Stanford and Harvard. He's done real estate development at Goregaon, which is his parent group, and of course started Workloft. He was featured in the Forbes Asia 30 and the 30 in 2022. Mr. Samir Bhandari, a co-founder and CFO. He's been from the banking world. He was managing director, co-chair for global markets at Nomura, brands like DBS, JP Morgan, and he's based out of Singapore and India. He's, of course, studied from IMA, and he's a CA from India. Our CIO, Mr. Mayank Jain, he hails from the real estate groups like Everstone, Tyco. He's of course a computer engineer. He's a lot of qualifications in India and abroad. The main thing that I would like you all to register is that he's been at the forefront of commercial real estate, especially on the warehousing space in India. Been part of a $1 billion fund that he's managed in commercial real estate space, and being able to sell it to Canadian pension fund. So sort of these are eyes and legs and hands for all our great investment decisions that we make for our investors. Myself, Mihir Kanakia, I have been in banking for 14 years in retail banking across wealth, acquisitions, liabilities, retail asset products, as well as about 8 9 years in real estate, where we've been involved in launching luxury products, holiday homes, as well as land and plotted developments. That's a little bit about me. Our CTO and Chief Technology Officer and Chief Product Officer, Mr. Vikas Verma and Anish Modi. They have been, of course, engineers, worked at really great organizations like PharmEasy, Willio, and Eclux. That's about it. And this is our whole partner ecosystem. We have valuation partners being one of the top 3 4 valuation firms in the world. We work with ICICI. Our structuring partners are PwC and Deloitte, and the works. So I'll now jump into just the investment structure across any fraction ownership, generally the way it works so far. I would just like to state that this is the structure which sort of complies to various laws as of today, which is basically the Companies Act, RERA, as well as SEBI, largely SEBI, and we're, since it's a relatively a new age sector in terms of investment options. This is the structure that really works and complies with our current laws. Just highlighting the fact that SEBI is already in advanced stages of evaluating and regulating us. They are going to come up with a regulation which will sort of formalize the sector in a big way. It'll help investors, it'll help us, and there'll be much more freedom and flexibility to invest as well as exit, both for the participants, the investors, and various stakeholders. So generally, the way the fraction ownership works is that you as investors we create a special purpose vehicle which basically acquires this particular asset that we are talking about, right? Because typically in any asset, whether it's a 30 crores, 50 crores, 100 crores property, which earns 9%, 10% kind of yields in obviously prime locations like Bombay, Bangalore, Pune, and the works. It's not easy to co-own with 50, 100 people, right? How do you really co-own the asset? Of course, since decades in India, there has always been this system of, on a friendly or a family basis, you join together, buy something together. Of course, we all know, a lot of us have seen the disputes and the discussions and the debates that happen when there is no structured way. Fraction ownership and this particular structure exactly solves that problem. We create a special purpose vehicle which owns the asset, runs the asset, manages the asset. It is managed by independent directors. hBits is of course at the forefront of managing the property, dealing with the tenants, doing the due diligence. That's the value added service that we provide as a professional player. But this company is the holding company, and its sole purpose is to acquire the property, manage the property, and basically run the show. As far as exit is concerned, this SPV is sold, or the asset owned by the SPV is sold eventually, so that you get your capital back along with the maximum appreciation that we can get. We create an escrow account for every SPV, which is only dedicated to this company, of course. And whatever investments you put, we don't touch that money. It's in the escrow. And the moment the property has to be registered, the money is paid out from that escrow account. And basically, at a very simple level, that's how it works. So you don't really need to bother about how many co-owners are there or who is the co-owner. You get to see everything right from the property registration agreement, the rental agreement, who's how much ownership. Everything is in black and white and owned. The investment process is very, very simple. Like I said, we are a prop tech firm, made it relatively easy for as compared to traditional real estate. You just have to create a simple account on the hbits.co. Just sign the EOI digitally, update your KYC digitally, and just sign the ownership agreement again, absolutely digitally. And the moment the property is registered, from the next month onwards, typically you get to start earning the rents which the SPV earns on your behalf. Uh, and SPV is what you really own. So we issue an equity share as proof of ownership of the SPV, which is the special purpose vehicle, and as proof of the investment, and the instrument through which we pay you the rent is called is basically a compulsory convertible debenture. So it's sort of financialized real estate, and that's what makes the magic of owning, acquiring, and managing the real estate very easily, because we've sort of financialized it. It's on paper, it's clean. Somebody neutral does the running of the property. This is just a very quick view. Once you own the property, this is just a sneak peek into how you can see. It's like owning a mutual fund or a stock. Obviously not as advanced as that, but you can see the property that you own. You can see the gross inflows every month. You can view, you can see what has been deducted in terms of taxes or fees. Everything is on a dashboard once you have your own login and password, right? And this is just a quick overview of about a dozen assets that we've done so far. All of them are in Bombay. We are now going to offer you opportunities in other cities of India as well. We've reached close to 250 crores of assets under management already, over and above the 3,000 crores of assets that our group manages uh, in India. Our tenants, where we would like to really focus on the tenants. Our tenants are mainly top ICICI Bank, Mane, IIFL, SmartWorks, the works. So the tenant profile is extremely important, because your investment, your capital, and your income is basically dependent, obviously, on a good quality property, but most importantly, a very good quality tenant, which pays on time, pays regularly, has predictability, and you don't need to worry about vacancy risks and exit risks. Would just like to highlight quickly that we have been the only player who's exited since we started. Some of the properties that we've exited, we were the only one who exited one property which with an internal rate of return of 17.54%. So our investors have not only seen and experimented entering such an investment, but also seen the value of earning the rent every month, as well as getting the capital with appreciation back in about 3.5 years. So that's a quick one. Now I'll jump into just the asset itself and the opportunity. Just wanted, for those of you who are not from Mumbai or have not lived in Mumbai, I just thought I'll just take a step back and just show you what are the micro markets from a commercial office space perspective in Mumbai. It's of course the central business district, which was and continues to be the original sort of commercial area, which is the Nariman Point and the likes. Then of course Lower Parel is a big hub. Then there's the Bandra Kurla complex. We have Navi Mumbai and Thane, which are sort of extended parts of Mumbai. Then there are eastern suburbs. There is some bit of commercial supply there. Then there is Andheri Kurla Road, where we have ourselves done several properties, and all of them are sort of earning good money for our investors. And the western suburbs, which is where our property lies today, right? And I'm going to focus on the micro location later on, but this is just for those who are not from Bombay to give you an overall sense. Also, just to quickly cover on why generally commercial real estate is doing really well. And this I thought I'll cover only because for anybody who's investing for the first time, and what's the overall market look like. We have tons of data and valuations on why commercial real estate is a great investment. But basically, at a very simple highlights, the commercial real estate in grade A company office spaces has been just going up. Bombay, as we all know, has very limited land for new developments. So, and the FSIs on commercial is generally high in good areas. The office leasing that has happened in, for example, last quarter in December 2022 has been 50% higher than the quarter on 2021. And after COVID, of course, as we all know, most businesses, including IT, media, and services, have resumed back to office. So all the demand that had been stuck has is back with a very roaring demand. And we are here to help there. Generally, also to give you a sense, we are sort of part of the real estate investment trust kind of a market. As we all know, there are some real estate investment trusts, uh, and it is mainly the big institutions that get access to these big commercial properties. At hBits, what we do is we get those entries to investors at literally just starting at 25 lakhs to the same similar very big commercial properties in great locations, which the institutions really give option to invest in directly between institutions. So it's not really, not to put them down, but not really democratic in that sense. You get to invest here as well, as long as you have money to invest, and most importantly, diversify your wealth. The one of the key parts of our asset is the ability to diversify your wealth investments. This may not be necessarily your main goal of investment, but it's a good fixed income asset based on real estate. Yeah. So here's our asset. As we call it, it's a tech multinational company based out of an IT hub at Western Express Highway, Goregaon, Mumbai. Like I mentioned earlier, it's in the suburbs. It's I'll just quickly cover the highlight of the property first. It's a premium grade A ITES development in Goregaon East. All the tenants in this grade A building are all from the ITES sector. Most importantly, the entry yield is 9%. The average yield over 4 to 5 years is 8.41%. Very important for any good commercial office investment, and very rare to get. This is the fourth term of this company with the landlords here. They are renewing for the fourth time. The new terms start from December. The escalation is 2.5% per year. And the lock-in period starting December 23 is 3 years. Again, repeating, this is the fourth term. So they have been in this space for almost 12, 13 years now, and they are renewing for another 5 years. It just talks a lot about the stability, the continuity, and the assurance in terms of the good tenant, and the fact that there is hardly any supply in this market. Um, as some of you may know, Goregaon is a very small micro market from a commercial office space, which is why only top companies are there. There is zero supply in terms of sales. This is a very small asset which has come, and we've been able to acquire, and you should of course deep dive into it. our rentals are 14% below average market price, which is essentially to say that there is a lot of room for growth. That's what typically matters when you invest in fractions. As we have already said, it's a minimum 25 lakh investment. While it's a minimum 25 lakh investment, for those of you who are doing it for the first time, or for those of you who are falling short a little bit, do feel free to reach out to our investment managers. We'll definitely put you in a wait list. And as soon as we get an equity share before we close the asset, we register the property. If there is whatever money you have, if we can issue you a share for that, we will try our best to do that. This is the asset overview. This is a little bit about the group. They've already done 15 odd projects. They've done 5.2 lakh square feet. This is one of their main landmark developments. This is the actual snap of the property. As you could see, when you passed from the Goregaon Western Express Highway, it's on the service road. It's a G+2P, 2 parkings plus 10 floors. There is nil vacancy in the property. Every single office space, which is about 3 lakh square feet, is all leased. There is nothing available here, and which is why it makes it an ideal opportunity. It's luckily on the place, as the Bombay metro network is expanding very, very fast, but the metro network connecting to this place is already up and running since last year. That is one big plus, which essentially helps attracting a lot of good talent and retaining talent, because commuting in big cities is one of the key to quality lifestyle, and it matters a lot for the employees to be able to reach at the same place, at your office at a great place. One very, very important point, again, for some of you who might have, visited Bombay for business, attended exhibitions. It is right next to the Bombay Exhibition Center. Very, very crowded, very, very busy area. Very well connected to the airport. And like I said, it's already very connected to through the metro. This is the building stack plan. Essentially, this is just a list of all tenants across floors. The property that we are talking about is the first floor. The entire floor is leased by a company called Gupshup Technology. I'll just cover a bit about Gupshup further. But this gives you a sense of the fact that there is, not everything is true only when you can touch and feel. And this is in our way to tell you that every floor is already tenanted. Everything is already occupied. Really great brands sitting in this office. Just to give you all a sense what you will own through this SPV, it's 8,100 carpet area. Chargeable is about 13,500 square feet. Basically, it's about 170 odd workstations. And in a way, you're basically, I would say there are only about 75, 80 fractions that are available for sale. And I'll share how much is available later on, but this is the total fractions on an average if we take a ticket size of 25 lakhs. And broadly, I mean, just to put things in perspective and just from an orientation perspective, you generally own about 100 to 125 square feet when you invest 25 lakhs odd. That is broadly about a couple of workstations in the whole place. I mean, this is just to give you a perspective. You don't need to really bother or care about which workstation and what, because basically you're just earning an investment product through a CCD and an equity share. But this is just to give you a perspective on what your company is owning, and what you sort of have contributed to own and what makes you the rent. Yeah, this is just a few of the asset photos. A great lobby at the metro network station, and of course, a great facade. Let's delve a little bit on the company for those of you who may not be following tech so much. Gupshup Technology is an Indian startup, but it's now a very well established company. It's in fact headquartered in Cupertino, California. The Bombay, India office is of course in this particular property. It was started by Mr. Birut Sheth. I would just like to highlight the fact that just to give you all a sense why this tenant is great. It has 18 years of industry experience. As we all know, digitization of almost everything, AIization of everything, and techization of everything is happening, and they are at the center of it. And just to give you a perspective, they are one of the number one emerging platforms from Asia. They basically provide conversational engagement platforms and across continents, by the way. And just to give you a sense how they touch your daily life is they are the tech providers to the big tech companies like WhatsApp, like Amazon, like Netflix, like Google. They providing the messaging solutions from the backend perspective. You and I obviously don't understand or know how Gupshup is a part of it, but these big tech companies are the ones who employ services of companies like Gupshup for deploying these messaging solutions for you and I to interact with them, whether it's an Amazon order or a Google messaging or a WhatsApp business messaging. These are the people who provide those services to those big tech companies. And why it's important for you to understand is that you don't get very often great tenants like this who are in a fast growing market themselves. And obviously that affects your ability to earn rent, continue to earn rent from these tenants. Supply is less, so they also don't have much motivation to move their offices and places very easily. There is a crazy hunt for talent, so they want to retain talent, and the right place, good office, good environment plays a big role in their success as well. So that's why we thought we'll cover a little more detail on the tenant. These are all the places and countries that they are present in. That's about 30 countries. They have offices across the globe, like I said, and the biggest emerging player from the emerging markets, rather. Like I briefly covered, these are their clients: Facebook, Netflix, basically Meta Group, and even big tech IT companies like Infosys, banks like HSBC, HDFC, social media platforms like LinkedIn, the works. They have a footprint in every sector, every industry, which is new age and at the forefront of serving clients. These are just a few case studies. For example, they improved business for Swiggy, Ola, and Tata Click. This is just the location overview. It's 200 meters from the Western Express Highway, 400 meters walking from the metro station. It's very close to the Jogeshwari Victoria Link Road, which basically connects the western suburbs to the Thane sector. It's very close to the Andheri Kulla Road, just about 3 kilometers. The airport is about 6-7 kilometers, which is why it has been sort of the mainstay as far as hosting exhibitions in Mumbai is concerned. And it's about 12 kilometers from the Bandra Kurla complex, which is, of course, one of the main office hubs. And the building's name is Silver Metropolis, Goregaon. This is just to give you a sense on the kind of tenants that this micro market hosts. I already covered the tenants that this building has. This gives you an overview of the other buildings and what kind of tenants they have. In Nirlon Knowledge Park, you have JP Morgan, Citi, Deutsche Bank, Ernst& Young, MUFG. In Nesco IT Park, which is walking distance from this building, you have HSBC, PwC, KPMG, and the works. You have eBay, Aditya Birla Finance, and the list goes on. And mind you, just to repeat, there is zero supply to buy available. We've been lucky with the investor wanting an exit, but there is literally no supply. If you want to buy a property, it's very difficult to buy a property here. In fact, any transactions that we evaluated were like very small, as small as 1,500, 1,800 square feet, which just gives you a sense that there is no supply in this area. This is a very important slide. The per square feet rent that you are getting, this tenant, this asset has, is 117 rupees. The average rental in this area is about 134 rupees per square feet. As you can see, the whole list, we will be sharing all these details later on with you if you want to evaluate further. But basically, even within the Silver Metropolis building, the average rental is 130. One would ask, why is this lower? landlords, developers, whoever hosts such nice tenants, they don't want to lose them. The rent has obviously been going up year on year, and they have been here for 3 terms. This is their fourth term, and obviously there is scope for it to keep going up, which is also an addition to the fact that the price that we are buying this property for you on your behalf is actually at about 17,400 square feet thereabouts. The market price is about 19 and a half, 20,000 square feet. I mean, very limited transactions have happened in the last 2 3 years, but there is any good investment uh, does have to start with a discounted value to the market, because that itself takes care of your appreciation. And this property does exactly that. So the rent and the buying price is 14 to 15% lower than the market, thanks to negotiations, thanks to the need for the seller to sell, as well as, every buyer wants to churn their property and resell. And we intend to resell this property after 4 5 years, because of lack of supply. There is obviously going to be good appreciation that we expect. uh, I'll just quickly cover. The licensee is starting renewing from 1st December. It's going on till 30th November 2028, the current term. There is an escalation of 2.5% every year. Chargeable area is 13,500 square feet. Gross rent is 125 per square feet. Net, we have already covered. The annual rent that this property earns for the investor is slightly above 2 crores. And of course, there's a security deposit. This is just a quick snapshot of the entire cost of the property. I would love to highlight the fact that it's a very small property. It's just 27 crores. So we have room for only about 75, 80 fractions, hence investors. Obviously, some investors, invest much more than 25 lakhs. So that reduces the number of equity shares that we can issue in the ownership. So it's very important that you know that it's a very small asset. We would love you to have and be part of it and earn the 9% yield with an IRR that we are expecting over 5 years, which is about 15.49%. It can go above as well, but we'd like to be conservative in general, so that we are realistically talking with our experience. This is just a quick snapshot of how the whole breakup of income and expense goes. We will share the entire financial model with anybody who's interested to invest further. Um, it's just the key terms. There's a 1% management fee every year, and there is a performance fee of 15% over 10% IRR. And of course, there's an acquisition fee as any investment. And we've already covered the investment thesis. I think I'm pretty much done with my side. I would just like to summarize. It's a 27 crore asset. We have about 10 days. As you know, this is a pre-launch, mostly for our, we've already interacted with some of our partners. It's for a lot of you are our existing investors. And please reach out to our investment managers for some special offers, only and only for our existing investors in terms of the fees. Do reach out to them. They will give you more details. We are launching formally on the 30th of November. We can start registering your interest today, and we'll start the window for booking, which is essentially an expression of interest and KYC to be digitally done within the coming week. Once you do that, you are assured of your investment, and by 8th to 9th December, we will be closing the uh, asset in terms of registering once your investment is done, once we do the paperwork, we target to register the property in December. And hopefully, if all that happens in time, of course, there are a lot of dependencies. But if it happens on time, we want to start giving you the rent as early as possible, maybe as early as Jan. That's the broad timelines. Just to share with everybody, and thanks for all of our existing investors as well as our partners or who already invested with us. We are already 40% funded. Essentially, there are only about 55, 60 odd fractions available. When I say fractions, I repeat, units of 25 lakhs each. You are, of course, welcome to invest more. That reduces the units. You have a good 1 week for you to register, and and we will get, of course, the webinar link later on. I will open this for questions. I'll just stop sharing my screen and take on your questions. Okay. Who are the directors of SPV, from Mr. Singh? Well, the directors are typically chartered accountants. You will be given all the details about the directors when we register the property. You will have all the information. The SPV has been already created. The escrow account has been already created. This is our 12th, 13th asset. So we've done this, and we can share all the documents or the kind of documents that you will get to see. Not only that, if you want to view the tenant agreement online, if you want to see how much of the data that we are showing, if you just want to verify it in some way, we are happy to do it on a Google Meet. One of our investment managers will surely help you. Question from Mr. Vishwa: how can you compete with your competitors? Well, there is space for everybody. So, there are hardly 4 or 5 players. Thanks for the question, but we are very happy to be here for 5 years now, and every sector, every asset has competition, and we are I think doing pretty much okay. And yeah, okay. Why someone anonymous attendee has said, why have I invested in I'm getting 9% interest rate already from financial banks which are insured by the RBI? Very good question. Whoever is the anonymous, thank you for this question. Everyone should ask this question when you are investing in this property like that. So I'll just repeat the question for everybody. Why should I invest as compared to similar products in banks? Banks are insured by RBI. That's a very valid question. I have worked in banks, so I completely relate to it. Basically, the main reason, and this is from our investors, and is twofold. How do you own a good real estate in a good location, professionally, as well as in a clean way with no riffraff? Uh, Real estate has been traditionally unorganized, right? Plus, diversify your portfolio. If you are somebody who's investing in stocks like I do, if you are somebody who's very investing in mutual funds like I do, which further invest in stock market, uh, there is a risk to every asset, right? And diversification is the answer to any asset or investment portfolio. And it may sound cliched, but this asset is a great way to divest your portfolio. It's a fixed income, almost market proof. I'll be careful to say market proof, but it is almost market proof for a simple reason that the 9% income that you're getting is not really dependent on the stock markets, not really dependent on any other financial products. It's a real company leasing a real space which earns a real rent in a good location. And if you see a little bit of data, if you Google in the last 2-3 years, especially after COVID, rents have only gone up. Rents generally don't go down. That's the market norm. And that is, I'm specifically talking about commercial real estate. As we all know, residential real estate are also great end-use assets, but the maximum yields that you can make in them is 2.5%. And of course, exit is not so easy. So I hope, I mean, it may sound generic, but there is no, and you should continue to invest in your fixed deposits and mutual funds and stocks for sure. Percentage of investments across asset classes is, of course, your risk, depends on your risk appetite. But you should invest in this as much as you invest in NCDs and corporate FDs. We all know a lot of, unfortunately, some banks have tanked, some NBFCs have tanked, who issue these financial papers in terms of credit, giving 10, 12%. there is no guarantee on anything, right? So there is no shying away from the fact that there are other products that you can invest in, but this is a good way to invest in a commercial real estate. Most importantly, when we resell the property, the IRR ranges from 15 to 18%. So it is about diversification, number one. Number two, you get to own real estate without the hassles of real estate that have been typically existing so far, which is, the transactions only invite. Everything is on paper. You get equity shares and CCDs. You can see on a dashboard literally how your price valuations are going up, almost like a stock market. And it has never been so easy to invest and exit from the property. So I hope I have answered that question. I'll take the next question from Mr. Singh. What is the total area acquired? I've covered that. About 8,100 carpet area and 13,500 chargeable area. That's one full floor. The yield you mentioned is gross. If you have not got the financial model snapshot, we will also share the year-on-year net gross cash flow as well as the net cash flow. There is an entire financial model that we can share with. Please do reach out to your investment manager or our website where we can share all these details with you. It will give you every single information on cost, expenses, taxes, and income, and that will give you a better idea. But like I said earlier, the average yield is about 8.41%. There is one question from Evais Temi. Given SEBI's proposal requiring 15% investment from fraction ownership players, how much is hBits investing in this property? A good question. I would refrain from sort of interpreting it for everybody, the consultation paper on this. But essentially, you're right. That's what the SEBI has recommended. They are talking to industry players like us. In this asset, most of the assets are directly owned by the investors. That's the whole idea. And hBits may or may not necessarily invest in this for a simple reason that there is some sense of conflict of interest, as well as the fact that uh, we are here to give the opportunity for you to enter a commercial property. We are in this business anyway. So the investment requirement of 15% is not yet implemented because the SEBI norms on micro sector and medium REITs, which we will be eventually categorized as, has not been out. In fact, there was just recent news a day before that they are going to share the finest draft rules and things like that. So we will ourselves know what is the minimum investment going forward after the regulation that any fraction owner will have to go through. So I hope I've answered that question. Well, what's your future roadmap? How we can see hBits in the coming years? Well, very generic question, but I hope I can quickly answer that. Our journey has been 5 years now. The industry is almost as old as that. We've done close to 50 crores. We have launched an alternate investment fund, which is almost 500 crores, approved by SEBI. We intend to keep growing our portfolio, reach 1,000 crores plus. Obviously, not as envisioned in the nascent stage. Now we're at an advanced growth stage, so we hope to reach 1,000 crores and more in the coming 8 to 10 months, rather 6 months, as soon as possible. And with the help of investors like you, and obviously awesome supply from the market that we are expanding, we are going to expand further into other cities beyond Bombay, which is Pune, Bangalore, in terms of property acquisitions and people as well. So that's how we are going to build the portfolio for our investors. This property is close to 18 years old, well maintained, and grade A, like I said. Mr. Gogia, what is the expected rent per month with an initial investment of 25 lakhs? When would the rent start crediting? Thank you for this question. The expected rent, like I said, we'll share the entire model, but the expected rent gross is about 16.5 to 17.5 thousand rupees per month. There is a deduction of management fee and the standard TDS. We will share the exact figure in the financial model. You can input the amount that you are investing and you will get the exact monies that you will earn per month. But I'm just covering the broad range. Why is your average yield less than 9%? As I understand, you have an escalation every year. Well, Mrs. Singh, so the average, first of all, like I said, while it's a financialized real estate investment product, it's not. It's ultimately dependent on a real property that we have to buy, negotiate, and the willingness of the seller to sell it at a certain price, and the willingness of the tenant to pay a certain rent. Right? In commercial spaces, you get anything above 7.5% yield is generally considered to be good. And the proof for us has been our assets that we've done in the last 4 5 years. That's about a dozen assets. And we evaluate, by the way, the assets that we've acquired so far and managing, including this asset, is literally just 1.5 2% of the total assets that we evaluated. And 80% of them don't fall out of our criteria for a simple reason that the yields are not above 7%. So some assets we have given 10%, some assets we have been able to give 9.5%. All depends on the market forces and the property and the availability of supply. The good old law of demand and supply works. This is the current trend. The escalation is 2.5% every year. It's a renewal of the term, like I said. And the average yield wise 8.41%. If you see month on month cash flow, this is unlike other financial product investments where you have to entry and then wait and exit. Here you are getting your rent every month. In fact, if you calculate your annualized yields, wherein the income that you're getting every month and that money is what is making money, is actually first year about 9.35%, and it goes, the average yield goes to about 8.8% over the next 5 years. That's the annualized yields as per the cash inflow and outflow. So we don't talk about it other than the financial model, because we just want to be upfront and sort of conservative as far as our headline figures are. But that's what this asset provides. Very, very difficult to get 10% kind of yields to across any commercial office space. One question is, who's the developer? So it's the Silver Group. We covered one slide on that, but you can Google. They have built commercial and residential offices. Just to clarify, the seller here is not the developer. It's a group of investors who are the landlords of this particular property. We are not dealing with the developer. The developer has already sold out everything. We are just, we've just got this property to sell from the landlord. Is the expected IRR 15? Yes, the expected IRR is between 15 to 16%. To be precise, 15.49%. More the merrier. You will get the assumptions and calculations in the financial model. Why is the rental income lower from second year onwards? Well, Mr. Sharma, very quickly, I'll answer that question. Basically, like I said, your income depends on broadly 2 3 heads. One is obviously the actual rent. Then there is reserves and deposits that earn interest, which we add. And most importantly, we also, to make it much more lucrative for you, add a top up, which gets added first year, which makes your yield 9%. So it's a top up that we add from our side, which sort of makes the asset much more enticing for you to invest, as well as it sort of addresses the question of whether my yield will be at 7.5% or 8% or whatever. So your average yield, in fact, goes up at 8.4% because we also do a top up structuring from our side. You will get the details in the financial model, which is why the rent from the next year, you will see a little dip in terms of the rent per month or the rent per annum that you are actually getting every year. Is hardly 100 to 200 rupees that goes up. So while percentage wise, you may see that, it's 9% and 8.5% and 8.6%. Frankly, per month, the income that you get from the asset is literally just a few hundred rupees here and there. But it's primarily for the reason the way it's structured on paper is why you see that difference. Pooja Sharma, how can channel partners associate with you? From Buddha Realtors. Yeah. Ms. Pooja, feel free to reach out to us. We have a resource in Ahmedabad as well. You can, of course, we will reach out to you after this webinar, and very happy to engage with you and expand our network. I've already answered the question, Mr. Parekh. It's not from Silver Group, who's the developer. We are buying it from the reseller. Um, What is the tentative timeline for registering the property? I'm just going to move through the questions because there are a lot of questions. I'll not be addressing the repetitive questions. The tentative timeline for registering the property is post somewhere between mid-December to end of December. If like I said, because it's a real property, once you do the EOI, KYC, as well as the monies are received, it does take time for us to collect the property, get the registration, sale deed done, get the dates for registration and things like that. So our target will be December. It may spill over to Jan if it has to. But what our target is to make sure that you start earning rent by Jan. I would just like to repeat the dates. We are closing the asset by 8th or 10th December. It's already 40% funded. We are happy to welcome your investment, and uh, it everything depends on clockwise timelines in terms of collecting the money, registering, and then issuing the shares, debentures, and things like that. So it does take some time because of the paperwork. I have already covered a bit of the developer background, so I'm not going to address that. Once we send you the detailed investment memo, you will have details on the developer as well. On the Mr. Gupta, on the fifth year, there is sales proceeds. If sale don't occur, what other option do we have? Well, thanks. It's a very valid and a very important question. It is real estate at the end of the day. Our target is to sell it. One of the main jobs that we do is keep evaluating the property from professional international valuers. Every quarter, we will be able to update you as well where the property valuation is going. So it's not like you invest the property and just earn the rent and keep quiet. We will be updating you on valuations, what's happening to the property. Our target will be to run the property, manage the property for 4 years. After that, start looking out for a buyer. Ideally, by the end of, I mean, it's not easy to find a buyer, especially at the price that you want. But generally, between the fourth and the fifth year, we would target to sell. In case we are not able to find the right buyer and or the right price, we will continue to run the property, and of course, you will continue to earn the rent and manage the tenant, and hopefully keep increasing the rent. But every property has a life cycle. It will eventually sell. I cannot really predict if it doesn't sell what happens, because nothing happens other than you continuing to earn the money. But so far, we have been able to exit one of the properties in 3.5 years. So it all depends on market forces, opportunities that come up, as well as the right valuation, right? Because end of day, we have to give you the IRR, not just, you don't want to just earn rent of 8-9%. You want to earn the appreciation as well. So our job is to make sure we get you the right price as well. And of course, we ourselves make money only when we get you a good price. So I hope I've addressed that question. There are no fixed answers to this, but we have seen an entire life cycle, and we are pretty confident that we can do it, especially because there is no supply in this particular area. Um, what are the admin expenses and things like that? I've just briefly covered. There's a management fee of 1% every year that gets deducted from the monthly rent, and there are taxes. We will share the entire cost detail in the financial model. I've already covered the base rent. What has been the price appreciation of the property since occupancy? This is a question from Mr. Pabisati. Good question. I will not have the exact data point right now, but I will definitely get back to you on the escalation and appreciation so far. We have a JLL report. It's an international property consultant which has given us the valuations. We'll be able to give you some information on this later on. Someone will reach out to you and share the information. But appreciation, I mean, since the property The reseller had bought it from the developer about 15, 18 years back. And I for sure the appreciation would have been in double digits. But I let me not quote something that I don't have in front of me. We will get back to you on this. Will hBits buy the property under their name? How is an investor assured ownership? Thank you, Mr. Sheikh, for this question. This is not under our ownership. hBits just facilitates, manages the property, manages the tenants, manages the compliances to SEBI, the chartered accountants that run the independent as an independent director of the company. So the entire liaising coordination is done by hBits. And that's the biggest value addition that we do, and that's a lot of work. You are assured of your ownership because you get an equity share. So every 25 lakhs that you invest, or whatever the money that you invest in, 10% of it is allotted to an equity share at a face value of 10 rupees, like any unlisted share. And 90% is allocated to a compulsory convertible debenture that is issued to you as an instrument against which we will pay you interest every month. Um, right. Uh, do you create one SPV per asset? Yes, the answer to that is yes. We create typically one SPV per asset if the asset is small. If the asset is very large, we create multiple SPVs. Mind you, every SPV can have only 200 equity share owners. That's which is why our properties are typically between 30 to 60 crores or 100 crores, because there's a maximum certain capacity. Of course, that will be addressed once the SEBI regulations come through, and when we all will be sort of MSM REIT, where there'll be a business trust format where there can be unlimited. Rather, let me not cite and predict what the regulator says, but basically, it'll be much more easier to invest and have much more people in one property. Many more people can invest. Since we hold equity shares and CCDs, we don't need a demat account. No, these are unlisted shares. One at some point at the evolution of the sector, and of course the SEBI norms, it will become a listed share entity. So you can sell your shares directly in the marketplace for anybody else who's wanting to buy your equity share. Mr. Venugopal Swami is asking, how's the return capped at 9% and why not higher, especially in view of today's FD is 8.6%? Well, like I said, it's based on an actual rent that is coming, based on some structuring that we do at our end to maximize the investment for you. The rent is what it is. The escalation is what it is. And it will only go up because it's a good asset. So there is no replacement for you to understand that the fact that you are owning a property end of day, and it's the property prices that decide the property market forces that decide the yield and the investment and the exit price of the property. Unlike the stock markets or mutual funds where you can see the BSE Sensex, NSE Sensex moving. Uh, in comparison to FD, there is an FD rates at 8-9%. FD rates are, as we all have seen, are cyclical. Um, I would say rents are not as cyclical. In fact, they're almost not cyclical as compared to FDs. So yes, the liquidity supply, as it starts shrinking a bit, the FD rates start going up. But I would say it's an asset diversification thing, and you have to treat the investment as a diversification and of your portfolio and owning a real estate. FD will never give you an IRR of 15%, which this property will, over and above the fact that it will give you 9% yield. So I would say you have to evaluate it in from that sense. uh, okay, let me see if there are any new questions before we wind up. There is one very nice question from Mr. Jain. What happens if the tenant vacates the property after the 3-year lock-in? Well, typically any tenant agreement, and you will have access to the tenant agreement itself if you want to view, but typically a tenant agreement in a good company and a very good tenant agreement, which is what we do a due diligence on very well, is generally a 6 months notice period. Like I said, I'd like to repeat again, there is no standard answer. Every asset, every property has a different thing. So far, none of our tenants have moved in our existing properties. That doesn't mean it can't move here. But more importantly, there is 100% occupancy in this particular building. There is almost 95, 100% occupancy even in the rest of the micro market. So if this tenant vacates for any reason, we have enough time to replace the tenant. The demand is high, there is no supply, very easy. The rentals are lower, and this brings us back to the original question. The rentals are slightly lower than the market, which is why to attract a new tenant, in case should this tenant go away, are very, very unlikely. So you have to sort of trust the process here. Um, like I said, it's a fourth term. There are always lock-in periods, but if they move, the vacancy risk of the property is almost negligible because it's a small property. It moves out very fast. There's a question. I see. Okay. I see on Google Maps that there is a slum next to the property. Would this be detrimental for the price appreciation? Well, absolutely not. It has not been detrimental to the price appreciation so far. Slums are a reality of a big metropolis. And as you see more and more development, you see more and more of this sort of going off your eyes. This building, like I said, is bang on the service road, touching the Western Express Highway. It has not affected big tenants, companies to work from here. So I don't see any of this really affecting. Like I said, it's not an end-use real estate investment. You are not going to use it. It's purely for investment, and you should trust the data in terms of the financial model and the tenant agreements to give you a sense and assurance that it's not really going to matter. Do you need consent of all unit holders to dispose the assets, or it's at the discretion of the board? Very good question. Yes, like any private limited company, any SPV, there is a 75% voting done. I mean, that's the minimum that is required for the asset to be disposed of. So just to give you a very simple example, let's say after 4 years, we find a good buyer, we find a good price. We'll like any company, your independent directors will call for an EGM, put the data on the table, put the opportunity on the table. 75% of the people have to vote to resell the property. And if 75% vote, the property is sold, hBits will execute the transaction for you. And like it has been managing the property and giving you the rent, we will make sure that the appreciation and everything, paperwork, right down to the credit of the money to your account is done. What is the net yield for each year? Well, all those questions will be addressed once we send the financial model to you. So do be patient, and you will be getting all those answers. Please note. Like I said, there's another question on SEBI. So yes, once the SEBI's final draft laws come in place, it will pretty much answer all these questions related to regulation. We are ourselves eagerly waiting for that. In fact, to address these questions itself, what is the investment horizon you are looking at? When are you planning to exit? Uh, Again, just to repeat, our investment horizon is 4 to 5 years. We do see no or limited supply scenario in this micro market, even for the upcoming 5-7 years. So we do want to sell with you. We also want to make money. So we hope to sell at the end of the 5th year latest. obviously, like I said, you'll always get updates in terms of current valuations and whatever opportunities we get. There's question from Mr. Shrimal. Do we facilitate resale before 5 years? Yes, we facilitate everything, right? From buying to execution to managing to running the show, complying to the law, and then reselling. So that's what hBits does. Is there a penalty in case someone exits before 3 years? Well, there is no penalty as such. You are free to resell your share to whoever you want. We can facilitate it for you. You can come to us. We will be happy to facilitate an exit. Ideally, of course, it's very important that you stay through the investment period, the investment horizon of 4 to 5 years, so that you not only make the money on the rent, but also get an exit with appreciation. But there are sometimes investors who do come for whatever reasons, and after 2 years, 3 years, 4 years, depends on it, and we facilitate them. So far, any and every investor who has come for us to an exit, we have been able to fortunately do it in relatively quick period. But we generally, like any asset class, we would say at least a 4 5 year horizon is important. Yeah, again, some questions on exits, so that those I have hopefully addressed. How do you provide liquidity to the investors? Well, you get the rent, and when we exit, you get your money back. It's as simple as that. And once the regulation, like I said, happens, you may Google SEBI consultation paper on MSM REITs. It will address a lot of these questions in terms of an open marketplace, a secondary marketplace for buy and sell of these REITs as well. What is the hBits plan to launch projects in Bangalore? We do have the plans, is all I can say right now. Hopefully, we'll be able to give you some news on that very soon. Um, are you going to come with an investment of lesser ticket size, say 10 to 15 lakhs? We will technically, let me address it in two ways. SEBI has proposed the investment value minimum to be at 10 lakhs. So we will eventually comply to that. And like I said in the beginning of the webinar, if you have lesser than 25 lakhs money and you still want to invest and not miss this opportunity, do feel free to reach out. We will park your interest with us, and maximum within a week we'll come back to you in terms of how much equity share ownership you can get at, well, let's say 15 lakhs or 20 lakhs. The first priority, of course, will be for investors who are investing 25 lakhs and above, but we are happy to address your thing as well, especially if you're a new investor for the first time. We'd love to give you the opportunity as far as possible to get you into this property. Have you exited from any asset successfully? Yes, I have already covered that. We have given an IRR of 17.49% in that asset. It was in a period of, the entire life cycle of the asset was about 3.5 years. So we do have experience to exit. And there's another question on exit. So I'll just repeat. The best way to exit from this investment is when we resell the property and you get the capital appreciation back. The second best way to exit is you resell your share. You can reach out to us, or you can, and even in the market, your friend or family, anybody you think who wants to earn the rent like you did and they want to buy your share, we will help you with the current valuations, and you can negotiate, we can help you. But you can exit just independently, irrespective of the property being having resold or not. Well, there's a question whether SEBI has put those conditions of 15%, which are not conducive for the fraction owner players. How will existing investors be protected? Well, very, very good. And thanks for this intelligent question. Well, SEBI norms are here just to put perspective. Every time a regulator has come through, whether it's an AMFI for mutual funds, it's an IRDA for insurance, it's RERA for real estate, the market has only gone up. The transparency has only gone better, and people have only generally every stakeholder has only benefited. So there are some clauses that SEBI has proposed, which we think as players, we have come back to them, given our feedback, what works for the investor for us. Um, and yes, there were some contentious things, but this is not the forum where we can talk about it. Existing investors are absolutely protected even without the SEBI draft laws. Let me clarify, the law is not in place yet. The regulation is not in place yet. It is expected to be here in 3 to 4 months, hopefully earlier. But even our current investors, their investments are running absolutely fine because we are complying to every possible law that we have to and every possible act that we can as far as collecting investments and managing the properties is concerned. So, with or without the SEBI law in any form or degree, your investments is absolutely protected. Even today, you can see everything. You can resell your share. You can buy new properties. Nothing really has, no red flags have happened. And the whole idea of this particular type of asset class is the fact that everything is in black and white. The question of investor protection becomes a little hazy when you are dependent on the developer or you're dependent on some random undocumented investment. And all that is absolutely not the case here, like I said. What are the CAM charges? Well, that will be covered, I think, about 6 rupees per square feet. What is the security of the investor's wealth? I think I have addressed this question. It's a real property earning real rent, which you can see really. We our fortunes are tied with your fortunes in that sense, if I can make a general statement. So we don't make money if y'all don't make money. Put it very simply. What about the rent top up earlier? Please look at the financial model. You'll definitely get the answer to that. Um, Has performance fee being calculated on target annual capital appreciation of 10%? There is huge reductions of performance fee and capital gains tax. Can you tell us the net IRR? Yes, the net, Mr. Bhagwatyapan, we will share the financial model. It's best that you look at it. It will answer every single question. There are multiple sheets that will show you the cash flow inflow. Basically, just to address your question, the performance fee is a 10% on, if at all the IRR is about 10%, the performance fee is basically 15% of the incremental IRR that you make. So to make it very simply, if the IRR is 15%, our fee will be about 1.5% out of that, because 10% we can charge you only about the 10% minimum criteria. What if the entire fund can't be raised? Uh, Valid question. Not happened so far. Will not happen. Basically, there is just a lot of demand. Typically, we don't take more than 30, 45 days. In this case, much lesser because the asset is very small. But in case the funds are not raised for any reason, maybe there may be some diligence issue, for example, or it could be anything. You obviously get it's money is in the escrow account. So hBits doesn't have access to that money till the time the purpose of the escrow is fulfilled. So your money is safe and secure, to put it very simply. What is the date of payout credited in our account? I'm assuming you're talking about the rent. It's typically 15th of every month when you get the monthly rental credited to you. Uh, in whose name the property is registered, since there are fractional owners. I think I've explained that model, but just to address that question again, it's the property is owned by the SPV, of which you have the equity share ownership, and a debenture of the along with the equity share, so that you can earn interest towards the rent. Okay. We have very little time left, so I'm just going to quickly browse through uh, any unique questions. Okay, I think I have addressed. There is one question. Will you deduct TDS and pay the rent for NRIs? Good question. If you're an NRI, there is a separate process, as you would know. But basically, the tax will get deducted as per the double taxation agreement that all countries have with India. But it's typically the local Indians, the TDS is 10%. Uh, it ranges from 15% to 20% for various countries, but I think generally it's about 12 to 15%. You can reach out to our investment manager for, depending on which country you are in, you will have a deduction accordingly and taxed accordingly. Okay. One more question. Is there any cash part in property buy or sell? The answer to that is no. Everything is absolutely on paper and in black and white. That's the whole idea of this investment being very secure. Why 100% equity shares are not allocated instead of mere 10%? I didn't quite get this question. The equity shares are issued for as ownership of the SPV, and all the shares are issued. I mean, the owners to all the owners, depending on how many owners eventually are, whether it's 60, 70, 80 owners, depending on your investment value. So if you have a more specific question that you want to qualify, do write into us. We will respond to that. Right. So thank you very much. Thank you very much. You've been with us for more than an hour now. I was hoping to finish it off earlier, but thank you for all your questions. I would just like to summarize. The property is 40% funded. We will open the window for booking, doing EOI KYC immediately after this webinar. You will get more details, the detailed investment memo, as well as the financial model to address all your queries on inflows, outflows, taxation, and things like that. And very, very eager to have you all on board as far as this property is concerned, so that we can give you the next property very, very soon. I hope we've been able to build trust and give you the model and the asset opportunity quite clearly and precisely as much as we can. Thank you very, very much for joining, and really, really appreciate you all being there on this webinar. Thank you so much.